You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender.
Welcome back.
Welcome back, Jim Norton, Realty Pro 100. Welcome.
Thank you, Ron. Good to be here again.
Glad to have you with us. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls. I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan, a plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. And I think I've been celebrating a little. Well, maybe that's not celebrating. I think maybe I was celebrating a little bit too much, but it was all work. Yeah, first day back from the long holiday weekend. And was it a long holiday weekend? But let's take a look. Celebrating National Hand Roll Day. I like hand rolls. I like sushi. I like sashimi. You a sushi eater, Jim?
I love sushi.
Yeah, well, you better like fish after being in Cabo for the last 6 months on retirement.
I didn't have sushi in Cabo.
No sushi. You don't trust it there, or what?
Didn't want to go there.
I can't say I blame you.
But I can tell you the catch of the day is right now sea bass.
Sea bass, Chile. Well, you can't get Chilean sea bass in Cabo.
Local sea bass.
I just like Chilean. Maybe I'm a snob.
What is it? Mid-July, the mahi-mahi start to run.
The mahi-mahi.
Just kind of missed the mahi.
Okay, well, I don't run at all, so that's okay.
Yeah,
National Fried Chicken Day is today. You'd think that would have been on July 4th, wouldn't you? July 4th. Yesterday was National Bikini Day, and I was just recovering from July 4th. Did you come out and visit us? Well, we were out at the all in Anaheim Hills. The committee for the July 4th celebration in Anaheim Hills. They do a tremendous job. Not because I'm on the committee, because I don't do a lot of the work. I'm the media guy, the social media guy. I kind of report on what everybody else is doing. But they start with a 5K, 10K run. I think there's over 1,000 people in Anaheim Hills that were running at 7 o'clock in the morning. Walking or drinking coffee, whatever your choice might be, followed by a pancake breakfast with hundreds of your favorite people. That was good. I enjoyed that one. Dog show. That one was for the dogs. About 400 or 500 people went to the dog show. And I was a judge there. There had to have been 200, maybe 250 dogs registered for the dog show, followed by a parade. If you want to have parade in Anaheim Hills. Yeah, we do those in Anaheim Hills. And I'm going to say, yes, I know Huntington Beach, you think you've got the best around, but your city puts all the money up for it. Yeah, well, if Anaheim Hills had the money if Anaheim wanted to spend the money that Huntington Beach does, boy, that would be a heck of a competition. We don't have the ocean view, but we've got the Angels, we've got the Ducks, we've got Disney. Great time there. Fireworks. 3 live bands and a fireworks show. Can't go wrong on all of that, but let's take a look and get it until the next day comes and you're crashing. Move right along. Let's see what the market's doing. We don't want to talk about crash in the market. No, we're not going to put those two together. The Dow Jones now is down 157 points. The S&P 500 down 17. The NASDAQ down 49. Oil's finally going the right direction. It's down $3.51 a barrel. What does that mean to you? That means, well, it depends on where you're listening, what it means to you. In the formerly Golden State, we are paying $6.22 a gallon. Josh is over there laughing at us. He's at $5.50 a gallon. Jody's at $5.13. And our tremendous underwriter, Lori. Think about this one. She's at $4.34 a gallon. So our gas here in the formerly Golden State, give or take, I don't want to go in and do the math on it because it is early in the morning and I don't want to get into it. But our gas is about 50% higher than what they're paying in Louisiana. Does that make sense to anybody? Can anybody figure out why our gas is 50 cents a gallon higher than Louisiana? I don't know what the deal is here. Oh yeah, we live in California and we like taxes. Now think about this concept about taxes. You got to love it. You got to love Californians and California politicians because they think that we're stupid. And I'm not going to go whether they're right or wrong on that. Think about this one. So we're paying these outrageous prices on gasoline. We pay taxes on everything. I mean, if it's not debt, well, there is a death tax in the state, I think. So I guess even if you're dead, you pay taxes here in California. Whatever it is, taxed on everything. And then when it comes time for elections, the politicians say, oh, let us give you money back because we're going to give money back to the people they want or hope will vote for them. I don't think they want to give money back to everybody. But we keep voting for these same people that keep sticking it to us over and over again. Does that make sense to anybody? I saw that our wonderful governor went out to visit Florida, or he's got commercials going in Florida now, talking about how much greater the comparison between Florida and California. Now, let's see, crime, Florida beats California. Homelessness, Florida beats California. Should I look up the gas prices? Let's take a look because I hadn't looked at those. I'll take a look at those right now while we're talking. But remember, California gas, $6.21 a gallon, $6.22 a gallon. Florida is $4.50 a gallon. So I guess Florida's got us beat there too. Income taxes, Florida beats California. Job, business friendly, Florida beats California. Maybe Governor Newsom should go, instead of doing ads and going to the French Laundry, and I think he's in another state right now that he won't let the employees of the state go to. I forgot where they said he went to on vacation. Tough life, right? He's out there on vacation while the average person is suffering right now. But the employees of the state aren't allowed to go there, but he can. Kind of reminds you of his COVID visit to the French Laundry for $15,000 dinner. But I digress. But let's move along. We're looking at gas prices at $95 a barrel, actually $96 a barrel for that West Texas crude. Let's take a look and see what do we need to do here to get to our gas prices. So we're going to take and do the math once again. So we've got $35.92 a barrel of gasoline. Refining costs bring it up to $143.88. Divide that by 42, which is how many gallons you get out of that barrel, is 3.43. And you got to add the taxes and profit for the nationwide. So our nationwide number should be going down to $4.23 a barrel. Right now we're at $4.77. Add another couple of bucks for California taxes. We'll probably go down to about high fives. Think about these things. And then we go to vote, and we vote for the same people that stick it to us and tell us how. I mean, can somebody please explain to me this whole concept? How does it make sense to continue voting for the same people over and over again and have them do absolutely nothing but raise taxes into a recession? Unbelievable. We're going to continue our conversation. I don't know where to go with some of these things. You report them, and people continue to vote the same way, and you say, Are you listening, California? I don't care who you vote for, but don't complain about gas prices after you vote and then you just brought this guy back 6 months ago or 4 months ago. Unbelievable. How your equity can grow over time. On the Town, brought to you by our friends at Visit Anaheim. And let's do 5 things you need to know before buying a home in California or wherever you're listening to us. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. In the Mortgage Minute today, being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Let's see what the markets are doing. The S&P 500 now down 11 points. I think that's getting a little bit better than where it was. Bounced off some technical numbers there. 10-year Treasury up 8 basis points. It was down earlier in the session. Now it's up 8 basis points. Mortgage-backed securities are down 36 basis points. And every day at this time, I tell you that OBMMI provides the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. What did the rates lock at yesterday? 5.612 was the 30-year conforming. 30-year jumbo, 5.053, FHA 5.487. Best loan on the market for those who earned it. The 30-year VA loan, 5.235, and USDA 30-year rural areas, 5.405. Nice looking chart of the bonds coming down a little bit. So, or the yields coming down a little bit. So the bond going up. We maxed out. It looks like right around the 14th of June is where we kind of hit the highest price at that 6.056. But the question is, why is all of this happening? What's going on? What do we need to know? What do you need to know? Well, here's the issue. We've got the employment coming out this week. So tomorrow and Friday, we get the ADP report comes out tomorrow. The big BLS jobs report comes out on Friday. We've got the 10-year trading at 2.79%, battling with an important floor of support. If the 10-year breaks beneath that level, now remember the bond goes, the bond and the yield, the rate go at different directions. They always are going the opposite directions. Federal Reserve we've got their minutes coming out in about an hour or two, and that's going to really tell us what they're thinking, the minutes of their last meeting. Are they going to sell bonds? Right now, they're just letting them roll off their balance sheet. But if we find out that they're going to sell bonds, that might give us a little bit of a challenge. We've got more data proving that we are either in a recession or quickly heading toward a recession. We've got an inverted yield curve, and we've got copper going the wrong way. Two more items that are leading indicators for recession. And remember, I told you, we're going to see Orange County prices drop. Real estate values. We're going to talk to Jim Norton about this one and see who's going to be correct. We're going to get it on record here. Will Jim Norton be correct, or will the ladies and gentlemen of Chapman University have the right answer? Chapman says real estate values will drop by 12% next year. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Jim Norton, Realty Pro 100, welcome.
Chapman, come on.
Chapman, what do you have against Chapman?
What'd they say on their first annual report, though? Did they predict a drop? I think it was, 5%?
Well, they actually are the only one. So they obviously Chapman does a great job on their forecast.
They're over the course of the years, they have a good rate.
So in 2020, they did in December 2020, like every year, they do their economic forecast.
Right.
And they said they're forecasting what GDP would do in 2021. And that data just came out as far as what the final GDP numbers for 2021. Goldman Sachs said 5.9%. JP Morgan said 5.8%. There's another institution that said 5.8%, and Chapman said 5.7%. Anybody want to guess at what the actual GDP might have been for the year? And I think I've got a drum roll here. Don't look
at me. I don't know it. I'm not going to go back and look at 2021.
Chapman said 5.7.
They did.
They hit a bullseye right on, spot on. So they do a good job over there. So
okay, let's go back to today. If they're predicting a 12% drop in real estate values, that's easy because it's already at 12%. What are we at today? We
haven't seen anything drop.
Price decreases are coming out across the board.
Price decreases from the listing amount.
The listing amount, which means that it's interesting. You're seeing, if anything, I'm just giving you my snapshot.
Okay.
I'm not quoting anybody, but as I look at my snapshot,
Dr. Norton is in the house.
My snapshot. Anyways, what I keep seeing is if you see a price decrease on a listing, the listing's been out there for close to 30 days, so they didn't get anything. But if you're seeing a new on the market, they're starting to price it in already at the lower amount. So they're starting to think ahead. So
here's the data as of yesterday.
Okay.
So we
Official data.
We have a service that we subscribe to that gives us weekly data. They check every property in America, and give us some numbers. They come out with a new report every Monday. They send it to us. Obviously, we had the holiday on Monday, so they sent it to me yesterday. 30.4% of the properties that are listed took a price reduction last week. 30.4.
Again, Dr. Norton's numbers are not too bad.
Yeah, exactly.
It really does. It really doesn't take math genius or an economic professor. Yeah, it's coming down. That's a national average, correct?
Right. Yeah. The median home price went up just a little bit this last week. 455,000 is the median home price.
Did they attribute their decrease to slowing in sales
slowing in sales
based on mortgage rates going up?
Mortgage rates going up. Yeah. But here's the thing that fascinates me, Jim, is median home list prices of 455,000. New listings coming on the market, 420,000. So that's about 5% below where the numbers on the market, the new ones are coming on at 5% less than that.
Right, but that's all the fact too that listings are coming on is a good thing.
Well, yeah,
I'm just going to the basic reality of the market. The supply is not, obviously it's still a buyer. It's still a seller's market. On the supply side is not as high, but at least we're still pushing out a supply and keeping the market moving. That helps keep rents down. It helps keep mortgages down because we're moving the supply of housing. And it's when the high supply of housing backs up, something goes wrong for one of the other two. You either can't sell or you can't buy or you can't rent. Of course, renting, I think right now still is tougher than anything.
Why is that?
It's just a tight market.
Nothing to rent.
Nothing to rent. I glanced at it. My dad is old, but I glanced at it 2 weeks ago for a possible client, and in the 92870 zip code, there were only 5 parcels for rent, 5 single family homes for rent, nothing else. But and again, MLS does not include apartments, so there could be a lot. There could be apartments available. We don't have that data. That data does not show up for me at least.
Yeah, I'm sure there's different areas that we can find it.
Right.
We've got a comment. So if you want to make comments, I'd love having people comment and chime in on their thoughts as we go through the program. Go to StreamYard.com/Facebook, StreamYard.com/Facebook. And we can actually have a conversation with you because then we know who you are. So we've got a comment here, Jim. Sellers are getting smarter, coming in at a lower price. Sellers are coming in at a lower price to keep the sales moving.
Yep.
So basically what that's telling us is if you're coming in at a lower price, your anticipation is you want to get that property sold now before you have to wait and take a price reduction. And we all know what happens when you take a price reduction followed by another price reduction if you're trying to chase the market, bad things happen.
Right. You lose your marketing momentum. People start wondering what happened, what's going on, or they just move on. Buyers seem to move in groups. So whatever group is out there buying today might not be the same group 2 weeks from now. They can drop out, they can come back, more so than sellers. Sellers usually don't cancel as quickly as buyers decide to just stay put.
And do you notice? I'm just a radio guy and do some lead lending team, but as a realtor, do you notice that you get a neighborhood that nothing is sold in a long time, and then all of a sudden,
yes.
the whole neighborhood's up for sale?
I get to what you're saying. It's my neighborhood. 3 houses sold, 1 coming soon, and possible another one. It's just part of the transitory, though, because the older the neighborhood, the people are deciding, you know what, let's go ahead and catch up to the grandkids. And I'm seeing families move, and I don't mean like a family of 4, 2 kids and mom and dad. I'm seeing groups of family move. Brother and sister, they're moving to a certain state, and the other brother and sister, that type of thing, going to follow. The parents have already moved, and now they're moving that way too.
Whole family's following along.
Yeah, so the whole family's following along. You see that a lot, which causes, the adds to the market. But you're also seeing people go, okay, it's this is time to retire. We could retire now and go to where we wanted to go, and or we can, stay another 5 years.
So here's just some data for our unknown individual in obviously an Orange expert. The city of Orange listings have actually reduced. So even though I'm getting the wrap from Josh, I'm going to tell you that prices increase. There's been 1% of the new listings had a price gone up in price in Orange, city of Orange. This is based on the reports that we got this week. And if you're ready for this one, 40% of the listings have had a price decreases in the city of Orange. Days on market, median average days on market 33,
Right.
And the median rent $4,373.
That's a surprise. That's a
median rent.
That's a
Wow. That's a big number over there in the city of Orange.
You need to give your median description because people think it's the.
That's not the average, right?
Half the
houses are renting above that, or half the properties renting above that, and exactly half are below that.
And so that could be skewed by up in the Orange Hills. They could be getting
Sure.
$7,000-8,000.
Sure.
But yes, but still that pushes the average up.
And the market action here. So the market's been cooling over time. Prices have recently flattened despite the consistent decrease in market action. The market action index, there's seller's market where significant demand leaves little inventory available. And so right now we're looking at the numbers here. It had been in the 90s. Now it's in the 70s. 30 means 30 is the break from a buyer's market to a seller's market. You're listening to Ron Siegel Radio discussing your real estate current events and the financial markets. When we come back, more with Jim Norton, how your equity can grow over time and on the town. Brought to you by our friends at Visit Anaheim. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less? All without having to spend more each month than you spend right now. Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@RonSiegelRadio.com. Licensed under NMLS 217037, Equal Housing Lender. Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@RonSiegelRadio.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, the real-time real estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com. rsrhomescout.com. Best tool on the market that I know of that will let you shop for a new house. No advertising, no spamming you, no commitments, no requirements, no credit card. Compliments of Ron Siegel Radio. It'll also tell you what your property value is. Just push that fourth tab over. All great information right here from your friends at Ron Siegel Radio. How your equity can grow over time. My waistline grows over time, but I didn't know about the equity. True that record levels of home price appreciation have spurred significant equity gains for homeowners over the past few years. As Diana Olick, real estate correspondent at CNBC, says, quote, the stunning jump in home values over the course of the COVID-19 pandemic has given U.S. homeowners record amounts of housing wealth, unquote. First time Diana Olick has said something that's accurate. Unbelievable. That's great for your home's value over the last couple of years, but what if you've lived in your home for longer than that? You may be wondering how much equity you truly have. The National Association of Realtors, NAR, has done a study to calculate the typical equity gains over longer spans of time. The data they compiled could be enough to motivate you to move. Just remember, to find out how much equity you have in your specific home, you'll want to get a professional equity and assessment from a trusted real estate advisor. How your equity grows, let's start by establishing how you'd build equity in your home. While your price appreciation is clearly a factor that can help boost your equity, you also build equity over time as you pay down your home loan. NAR explains, quote, home equity gains are built up through price appreciation and by paying off the mortgage through principal payments, unquote. Average equity growth over time. The study from NAR breaks down the typical equity gain over time. And if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're seeing a graph right now on the screen of how wealth gain on a typical existing home purchased. Calculates the equity the homeowner potentially gained if they purchased a median priced home 5, 10, or 30 years ago and still own it today. 5 years, $155,000. 10 years, $240,000. 30 years ago, $359,000. Remember, these are national numbers. Here in California, our numbers are significantly greater than this. These six-figure numbers are impressive and certainly enough to help you fuel a move into your next home, but they're not a promised amount. Remember, your equity gain will be different. It depends on how long you've been in the house, your home's condition, any upgrades you've made, your area, and much more. If you want to find out how much equity you have, give us a call at 800-306-1990. We can give you an expert opinion on what your house is worth, not from me. We talk to our partners on that. Then we can actually look at what the balances are on your loans and give you an equity assessment there. And as always, we ask if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, can we count on you for that introduction? And I'm going to take this one step further right now that you're not going to hear this from anybody else. Get your equity. Take your equity out of the property, because I can't guarantee you anything. Death and taxes, we're pretty good at knowing that that's going to happen. But I'm going to sit here right now and say, Jim, can you tell me exactly how much property values are going to go up next year? No. How about how much they're going to go down next year? No. You know where they are right now.
You know exactly. You know what's in the moment. What's today is, it's like, well, is this the top of the market, the bottom of the market?
We don't know.
You only know that in hindsight. As I think we were discussing at the break, we were talking about Chapman hit the
bullseye.
The bullseye in 2021. So that's just been established. That's good for Chapman. It tells them that they're doing what they're doing is in the right direction. But at the same time, what does the average person do with a year-old data?
The only thing you do with
what equity I have, what can I do with it? How do I get it out?
The only thing you can do with it, and here's what I do with it, because you're right. That's data from a year ago that they forecast more than a year ago. But here's what you do with it. You know that they've got a good handle on what's going on because they've been doing it for so long and they've got such a great track record. So here's what I say to do right now. Take your equity. Get it out of your real estate. Don't sell. I'm not saying to sell right now. And I know some people are going to say, well, it sounds self-serving, Ron, that you're telling people to refinance because you lead a lending team. But here, listen to this. If I take my equity out right now, get up to a 75% loan to value, whatever that spread is, take that money out. And I know you're going to have a higher interest rate than you had before, but if Chapman is correct, if the bandwagoners who are now jumping on our bandwagon, we've been saying for almost a year that we're going to be going into a recession. Now almost everybody else is joining that bandwagon that we're going into a recession. Property values increase in a recession, but about halfway through, they start seeing some values coming back down a little bit. But have that money available to take advantage of opportunity. There will be people, unfortunately, that'll lose their jobs. There's going to be people that'll lose their properties. There's going to be people that are going to try and sell maybe at a discounted rate. They shouldn't lose their property to foreclosure or default right now because there's so much equity. But there are those people that will have to sell. They've got to sell in order to maintain whatever they want, whatever they have now, or for them to harvest their equity. You might get a great opportunity. You might get a great buy if you're in the position to take advantage of opportunity.
That's
right. So take the money, put it in the bank.
It's always been, the tradition always been is buy low, sell high.
So what do we need to do if we want to get ready for that, Jim?
Well, first of all, you got to get, like you said earlier, you need an analysis of where you're at, what you have. You need the information, and you're not going to get it from the internet. You're not going to get it from the news. You're going to get confusion because half the time you never know if they're talking about the national or if they're talking about, we're sitting here in Orange, California. Are they talking about Orange, California? And if they're in Orange, California, are they talking about the neighborhood you live in, which the values only go a quarter mile out. After that, it could change. It's like saying somebody, well, what's a quarter mile away? Beverly Hills. Well, obviously
I was on the phone yesterday with a gentleman and I almost fell off my chair, and it's not easy to just get me off a chair, but he's about a half a mile from Chapman University and maybe a 3/4 of a mile. And he said somebody in his neighborhood just sold their house for like $1.6 million.
Probably Chapman.
Probably Chapman, right?
They seem to be buying everything. Well, and again, the campus is growing, so you never know.
But I mean, it just amazed me. You look over there; a lot of those are older homes. Some of them actually do have property; they have land around them.
But is the purpose of the purchase? Is it to live in the home, or is it to perhaps create a rental to serve part of the rental housing for Chapman? And that's why he was able to get such a good price.
Now, even so, as a renter,
even so, one house in my neighborhood just the new people just moved in. And it was a couple of all things. It was a couple coming in from Colorado, moving. And
you're in Newport Coast, so
I'm in Newport Coast, yeah. And so
they must have had sticker shock coming from Colorado to North Orange County.
Obviously, they didn't. If they purchased something, they must have known what's coming. But it's interesting because everybody says everybody's leaving, but there's still a lot of people coming.
Yeah,
there's a lot of jobs and company relocation. So not everything is doom and gloom in that manner. So you never know where your buyers are coming from.
California real estate is still a good investment.
It still is. It always has been one of the best returns. Remember when I was in apartments for an apartment company, an apartment here in California, let's say a 300 unit building would spin off more cash flow than 1,000 units in another state. So
wow. Okay.
Everybody wanted a California. You wanted a California portfolio, definitely.
So if you're thinking about the idea of either as a first-time buyer, or if you've been in your home a while and you want to harvest and liberate some of your equity, what do you need to do? Well, I'm going to talk about the idea that, Jim, I think you need to get a credit report run first.
Correct.
Not Credit Sesame, not Credit Karma, not a FACO report. You can call us and we can get you what they call a soft pull.
Right. soft pull.
So it doesn't affect your credit scores at all. So you get a free soft pull, or you can go to a service like myfico.com. They charge you, but you get a legitimate credit report and find out legitimately where your credit is and get pre-approved, pre-underwritten from a mortgage broker or mortgage banker. Don't go to the, I'm going to just share, again, self-serving. Don't go to the big banks on the corner because they have one product to offer. If you go to the Stagecoach, they're going to only tell you what's available from the Stagecoach, right? They're not going to tell you what the Flag has or anybody else. Try it. I'll tell you that for sure. They don't know.
But if you go to someone like yourself, Ron, you're going to get an analysis too of what are your options, and that's what you really want, because that helps you make your decision to pull that equity. And what it's, it's not just the loan act transaction itself, it's the whole overall, okay, what can we do? You could bring in your accountant, talk about if there's any possible tax consequences or what over time, so let's say you pulled out a couple of $100,000. I just threw that out real quick, but you want to make sure, okay, if I'm going to put it in the bank, what do I need to do? Or better yet, how do I need to invest that so that it rolls the best amount of return?
So you season it properly. Yes. Don't pull it out from underneath your mattress. That doesn't work very well.
I saw, I think it was Facebook. Some guy said, how do you report this how do you report this to your lender when you want to give your credit report? And it was a big mattress stuffed up.
Yeah, that was funny. I saw that. Yeah. So the bottom line, it can be done, but it has to be done properly. Right. We're going to continue this conversation, getting ready, things you need to know before you buy. We're going to talk about that. And yes, we do have On the Town, brought to you by Visit Anaheim. All that and more. Reach me anytime. Off air number 800-306-1990. 800-306-1990 or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you, but the replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com. Do you know a homeowner experiencing divorce? Do you know a real estate reference in the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at RonIsMyLender.com. That's RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. Every week at this time, Visit Anaheim sends us over a tremendous opportunity. It's on the town, brought to you by Visit Anaheim. We've got the major event of the week, the romantic event of the week, and the family event of the week. Major event this week is, there's another one. Gosh, these guys at Visit Anaheim are good. I got to get a list of restaurants to go to from them. Zabon Ramen grand opening. Get your noodle fix at Zabon Ramen, a unique ramen restaurant originating in Japan. Just opened their second North American location this past weekend at the Anaheim Packing House. The first U.S. Zabon Ramen opened in 2016 and has quickly become one of the most popular ramen spots in Southern California. You won't want to miss this uncommon soup base and melt-in-your-mouth charred chasu. It's a Japanese braised pork belly. It's too early for us to go there, Jim.
No, let's go. Packing House.
Okay, we'll see you guys. Josh, you take it on the rest of the show.
Packing House is great.
Packing House is wonderful over there.
But just don't be stuck looking for one thing. There's so much to try.
Yeah, a lot over there. Romantic event of the week. Bend and Brew. Trade in your pancakes for a beer and yoga mat this Sunday with Unsung Breweries Bend and Brew, July 10th. Class starts at 11 a.m. and is on a first-come, first-served basis. Class is $20. Bend and Brew.
While you're yogiing, you're drinking a beer, or is it beer afterwards?
I don't know. It's 11 a.m., so I guess it's... If it was me, I'd probably have the beer watching somebody else do the yoga. But that's... I don't know. And I don't know if anybody wants me in a yoga suit, but that's a whole different story. Family event of the week, Reptile Super Show. Calling lovers of all things creepy and crawling, the Reptile Super Show is returning to the Anaheim Convention Center this year on July 9th through 10th. Beginning at 10 a.m., explore thousands of reptiles, amphibians, turtles, and everything in between with your family's reptile enthusiast. The show promotes conservation through education and captive breeding while still providing a safe, fun, and educational experience for all. And learn more and purchase your tickets at reptilessupershow.com/Anaheim-CA. reptilessupershow.com/Anaheim-CA. That is the On the Town segment today, being brought to you by our friends at Visit Anaheim. Always great stuff from Visit Anaheim. I look forward to this segment every week because I never know what they're going to send us to chat about, and they're going to explain. And Visit Anaheim does a really, really good job. Again, that's the On the Town segment brought to you by Visit Anaheim. Continue our conversation today. Jim Norton is in the house. We're talking about things you need to do to get ready, either a first-time home buyer or that home buyer that's liberated and liquidated or harvested some equity, because a lot of people have a lot of equity right now.
A lot of equity. I apologize. I didn't bring the data of how much equity has been built up in the
massive
over the U.S. It's trillions.
Well, we looked it's trillions, and we looked in California just the last couple of years, just for North Orange County. I think we had a chart here a week or so ago, $120,000 in like 2 years for the average homeowner. I think it might even be more than that.
But on top of that, multiplied by the length of the average homeowner length in the home has increased.
Right.
Remember, it used to be like everybody would move
every
6 years.
7 years, right?
7 years, and now it's gone up into double digits. So it's but on the other hand, it's a good time to look at. I mean, interest rates are relatively decent. They're not as good as 3%, of course, but they're a good spot to pull out equity. And then if you're thinking about jumping into the investment real estate, it's a good time to start looking at it. I mean, there's going to be a little bit more product out there. There's going to be a little bit more time.
So let me ask you this, Jim. Should I, if I do as I've suggested, liquidate or harvest and liberate some cash, and sit on the sidelines just to see what happens. We know the property values are going to go up.
Right.
We know that happens historically in recessions, but interest rates go down in recessions.
Right.
So one of the things we've been sharing is marry your property, date your mortgage, right? So you can get rid of the mortgage anytime you want to,
right?
And replace that. So would I be better off looking for a rental property to acquire, or say, something, let's hold off for a little bit, see if property values settle, and make my existing home into a rental and acquire something bigger, better, nicer for myself?
Either way is the plan. But I think where you said, should I take out equity and then sit on the sidelines? Let's clarify that sitting on the sidelines. I think what you really want to say is you're going to take that equity out. You're going to put together an analysis with a mortgage lender, with a realtor, whatever, and your accountant. You're going to put that in and know where it is you want to go. So let's say your object is to buy another single family home, and that one is going to be a rental. So you want to know how much money do I need for that to bring out? How much money? What price point do I want to wait for? And then you can see if it gets close to that or if it doesn't get close to that. Secondly, you can also reverse that scenario and say, hey, I'm in a 2-story. It's been here. I've been in it for 10 years, got a lot of equity. I'm going to pull some out. I'm going to go buy a 1-story and I'm going to turn this 2-story into a rental. That's a great scenario. There's nothing wrong with that. It's a great idea. But if you don't plan for what you want, you don't really know where you're going to jump in on the market. Otherwise, you're just arbitrarily throwing darts at the board, in essence. And what you really want to do is you want to have a good plan. And then once you have
works better with a plan.
Always works. Oh, trust me. And it's like very few people do that. They plan, they just sort of fall into something. But if you look at some of the seasoned investors and the people that have been very successful, they've had a plan, and then they have another plan. Then they know what they're going to do.
Do you have to stick to the plan, or can you be adjustable or
you can adjust your plan all the time, because you never know. You might come across, let's say you have 2 single family rentals, and you come across a 4-plex that you'd rather have. And so you can adjust. You might want to adjust everything. You might end up selling those 2 to pick up the 4-plex.
Sometimes you need to.
You might, if you need to, but you might find is you can pull the equity from those 2 to buy the 4-plex. Now you end up with a 4-plex and still 2 pieces of property.
And am I right in saying that sometimes you can own property, a piece of property for too long? Just because you've already got you've harvested all your tax benefits, and
you can. It just depends on that. That is definitely depends on your personal scenario. But yeah, you can. I'm a believer in Trammell Crow, the original. He was an old developer. You still see his name, but he passed away. But he was a developer out of Texas, and as he used to like to say, I own the first property I ever bought. He never sold anything. Just kept acquiring.
Keep buying. That's good.
Like the Winchester, the old Winchester. Keep building.
Well, the bottom line though is when you liberate some of your cash, you harvest some of your equity. That's not a taxable event,
right?
Right. You're borrowing money.
Exactly. We need to make it clear that.
And we don't give tax advice. You need to talk to your tax people, but
selling something off is a taxable event.
Right.
So is that going to really get you to the cash quantity you need to get that other property?
Yeah, so those are important things. That's why you have a household board of directors. Absolutely. Right? You want to have your realtor, you want to have your lender, you want to have your CPA, you want to have your estate planning attorney, you might need a real estate attorney, you need insurance people. There's certain areas that the insurance alone will make it unaffordable to buy just because of the hoops you have to jump through to get insurance. You need to know that in advance. Those are important issues. So beware of all of that. and consult, right? You got to have that household board of directors. We're in the middle of earnings season on the stock market right now. The Dow Jones Industrial Average, or the Dow Jones stocks and the S&P 500, they're all reporting earnings. You know what? Every one of those companies have a board of directors because no one's smart enough to run it all on their own. Do you think you have that, the tax license, the CPA license, the legal license, the real estate license, the mortgage license, the insurance license, all these things? Most of us don't. We need that household board of directors, just like the big companies have their board of directors. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh who's engineering us today. And of course, a special thanks to you for spending a little bit of your time with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime. 800-306-1990. 800-306-1990 or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
My boss just pushed me over the limit. I'd like to call him something. I think I'll just call it a day.